Thanks for clicking. Canada's fixed mortgage rates continued to fall in April as traders bet that the Bank of Canada would be reversing course on interest rates sometime in the near future. The anticipation of and almost pleading for interest rate cuts comes as Bank of Canada Governor Tiff Macklem has emphasized that they won't be coming anytime in the near future.
I'm losing my mind here.
Regardless, fixed mortgage rates have continued to drop, for now at least, which we'll get into, which has made it a little bit more affordable for Canadians to get into the real estate market. So what I want to do today is go over my best mortgage rates for the month of April, take a look at what that has done to affordability in Canada, and then discuss what to look for next. Speaking of next, the end of the month is upon us, so we should start getting April's real estate data in from the local boards early next week, which will give us a much better idea of how the spring market is playing out. We'll obviously have updates out on that data on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into these rates. First off, my best 5-year fixed insured mortgage rate. An insured mortgage rate, if you'll remember, that's where you have less than 20% down. You qualify on a 25-year amortization and at the contract rate plus 2% or 5.25, whichever is higher, and you pay the mortgage insurance. My best 5-year fixed insured rate in February was 4.99. That dropped down to 4.64 in March, and in April had dropped down to 4.49. And my best insured variable mortgage rate is sitting at prime minus 1.05 or 5.65%. So insured mortgage rates, those rates where you put less than 20% down, those are down by about 0.5% from a few months ago, and that's without the Bank of Canada doing anything. Next, my best insurable mortgage rate. An insurable mortgage, if you remember, that's where you have that 20% down. You qualify at a 25-year amortization at the contract rate plus 2% or 5.25, whichever is higher, and you don't pay the mortgage insurance. Insurable mortgage rates were also down. In February, my best 5-year fixed insurable was sitting at 5.19. That was down to 4.89 in March and had fallen to 4.79 as of April. And my best 5-year insurable variable mortgage rate is prime minus 0.5 or 6.2%. So, similar to insured mortgage rates, the best 5-year insurable mortgage rates are also down about a half a point since February. And uninsurable mortgage rates are down this month as well. Uninsurable mortgage rates, if you'll remember, that's where you have a 20% down payment. You take money out of your home vis-a-vis a refinance or an equity takeout, or you have a 30-year amortization, and of course you don't pay the mortgage insurance. And uninsurable mortgage rates are down as well. In February, my best 5-year fixed uninsurable rate was 5.14. Then in March, it was 5.14, but that has dropped to 4.94% in April, with my best variable uninsurable mortgage rate sitting at prime minus 0.4 or 6.3%. So we have insured mortgage rates down about 0.5%, insurable mortgage rates down about 0.5%, and uninsurable mortgage rates where you take money out of your home or have a 30-year amortization, those are down about 0.2% as well. And with rates continuing to fall, it's getting a little bit easier for buyers to afford higher prices, a situation upon which I think the Bank of Canada is going to be keeping a close eye.
From now on, I'm going to take a bigger hand in this.
Indeed, Canada's fixed mortgage rates hit their correction high in November of 2022, with a 5-year fixed insured mortgage rate sitting at 5.29%. This was shortly after Canada's 5-year bond yields hit their correction high in October of last year. At that time, the benchmark price of a home in Canada was $744,000. If we use minimum down payment requirements and we qualify at 7.29%, 2% above the contract rate, at that time you needed an income of $170,000 to buy that $744,000 home. Fast forward to right now, and rates have dropped substantially, down from 5.29 all the way down to 4.49 for an insured mortgage rate. Now, that same buyer with that $170,000 income has seen their buying power jump up by almost $50,000, or to about $790,000. So, between November of 2022 and April of 2023, those borrowers that were buying those benchmark homes have seen their buying power increase by about $50,000. A period during which the Bank of Canada actually raised rates by 75 basis points. And therein lies one of the big problems with the pause. When the Bank of Canada paused on interest rate hikes a few months ago, traders began to anticipate that they were going to be reversing course sometime soon. And as such, that started to get priced into the bond market. which, when the bond yields go down, so too do mortgage rates, which is helping to reinflate the real estate market. As buying power goes up, so too do home prices. So too does the amount of money available for equity takeouts, for refinancing. So too does the amount of money going to real estate commissions. That is going to show up in the CPI.
Cha-ching.
As money becomes more inexpensive, as the cost of borrowing gets less expensive than it was even 2, 3, 4 months ago, we see more money enter into the system at a time when the Bank of Canada is trying to get money out of the system. So, ironically, as traders continue to bet that the Bank of Canada is going to be reversing course on interest rates, it's going to make it even more difficult for the Bank of Canada to reverse course on interest rates. As traders try to front-run the bank, get ahead of the Bank of Canada's policy moves, it's going to make it even more difficult for the bank to make those moves. With that said, it is possible that traders are starting to realize this, as bond yields have been slowly creeping back upwards since they plummeted last month. So while we have seen fixed mortgage rates shrink down substantially over the past few months, it's not clear that they're going to stay that way if bond yields continue their trend upwards. With that said, we will continue to track Canada's mortgage rates and their effects on the real estate market on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.